Well, in terms of global markets, all three US indices declined in trade on Monday after that, really sharp and steep gain for last week or through last week. Monday saw a bit of a decline, tepid performance from all three US markets. The Dow was down around a fifth of a percent. The S&P 500 was down 0.3%. Mind you, through the quarter, which is quarter 1 FY23, the S&P 500 has been down 14%, which is the largest decline since the pandemic. So definitely everyone's eyes now on the close of this month and the close of this quarter, where the S&P 500 really closes. Moving quickly on to the Nasdaq, it was down 3/4 of a percent or nearly 3/4 of a percent in trade yesterday. In fact, when I'm looking at the US stock futures as well, they too are largely flat but with a negative bias, down anything around a tenth to a third of a percent. So clearly negative cues coming from US indices. Moving quickly on to what the outlook or what the investors are focused on. Of course, one is the recession risk and how the economy and the general health of the economy is. The June consumer confidence numbers will come out today US time, and the April home prices numbers too will come out today US time. So those two numbers will be on investor radar or on the focus of what investors will be looking for. Moving quickly on to how Europe closed. Europe closed largely positive. Definitely positive cues coming out of Europe. The DAX was up over 0.5%, so was the Stock 600, and the FTSE was up around 2/3 of a percent in trade yesterday. Moving quickly on, however, to Asia, they've taken largely their cues from how US markets have closed. That's how the handover has worked, and Asia is largely flat but trading with a negative bias at the moment. And when I'm looking at the Nikkei, well, it's down around 15 basis points in trade as we speak. The Shanghai is down around 1/3 of a percent. The Hang Seng down around 9/10 of a percent. The ASX 200 up around 1/4 of a percent, and the Kospi down around 1/5 of a percent. So all indices outside of Australia staring at a red. In fact, the SGX Nifty 2 is down around 1/3 of a percent, definitely signaling a negative cue for Indian indices, but largely the global markets are throwing mixed signals at the moment. In fact, the SGX Nifty was absolutely flat around an hour or so back. So largely at the moment negative cues, but largely mixed as well. When I'm looking at how commodities are doing, well, oil, which has been in focus coming off those highs of $120 a barrel, is currently roughly perched at around $111 a barrel. So there's been a bit of a spike in oil prices, largely on the back of further Russian sanctions expected, or sanctions on Russian oil expected to come through. Moving quickly on to gold. Gold has come off those $1,840 an ounce. It's come down to around $1,825 an ounce as recession risks continue to mar markets as well as commodity prices. Moving quickly on to how bond yields are looking. The US 10-year is currently at 3.18%. That's where it's perched at. Of course, bonds continue to remain in focus as the Federal Reserve continues to hike rates, and despite the recession fears that are coming through. Lastly, moving to crypto, well, Bitcoin is roughly at $20,500, and largely negative cues coming off as risk of trade continues to play off in cryptos as well. So that's how global markets are at the moment. There's a negative start expected for Indian markets, but mildly negative at the moment.